following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OX Radio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, and welcome back to the Option Block. We are, of course, your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as ye old Options Insider Radio Network, upon which many of you are listening to this fine program right now. And of course, if you've been paying attention to any of the national news of late, you've seen some perhaps aggressive weather systems floating around the Midwestern area, and that has indeed impacted us here in the Chicago area. We are recording the show, so several of our usual cohorts could not make it today. One of them is beaming in from the hinterland, so perhaps we'll start with him. He is none other than good old Alex Jacobson, a.k.a. the Viceroy, who, because all the highways and byways were flooded here in scenic downtown Chicago today, is joining us from out in the burbs, but still able to make it on the show. Alex, welcome back to the program, sir.
Hey, Mark, good to be here. And, it was an interesting weather day. I think the quote was we got between 5.5 to 6 inches in 2 hours. And those of you familiar with the Chicago area, the Edens was flooded, Kennedy was flooded, the train going to the airport flooded. It was just a joy. We were cutting down trees, and we are building large boats out here just in case.
You know, I went out.
Then I should have sent Giovinazzi up. He's in town, so
I have a flannel on.
Yeah, and he's got a flannel on, and we know how much he loves cutting trees.
He is one of those Mainers. What do they call the Maine folks? Maniacs? I don't even know.
Maniacs.
But that is also good old Mark Sebastian, who is joined in studio by good old Andrew Giovinazzi. How are you Option Pit Boys faring today?
Lovely.
We're good.
We're having fun.
Got a lot done.
We got a ton done while he was in town. Between firings.
Between firings.
Andrew, I hope you weren't planning on going anywhere anytime soon. I don't think it's going to be too easy to get out of flooded Chicago unless you have a nice boat handy.
I'm actually kind of hoping to take the train north. Is that out of the question, or is that a pain?
I don't know. As long as they're tracks that stay above ground, I think you might be all right. If you get into some of those subterranean tracks, then perhaps you are in for a wee bit of trouble. You know, I just came back from a vacation to San Diego a couple weeks ago. When I was out there, they pointed out that they get about 9 inches of rain a year. So we got over almost 2/3 of a year's worth of rain for San Diego in the space of 24 hours.
San Diego is a desert built on the ocean.
Yeah, the trains are okay. The Ogilvy Center this morning, I had somebody who called me from Ogilvy said it was deserted because nobody could drive to the trains.
Oh.
By the way, in after hours, IBM missed and Google surprised on the upside. So,
Alex, you're killing us. You're getting the lead going. All right. Well, I think since Alex is hitting on it, we'll just dive right in to the old trading block.
The trading block.
All right, and that cacophony means that it is time for Ye Old Trading Block. This is where we break down the day's worth of action on the street, and it was another bloodbath on the old street today. Most of the major indices seeing some aggressive red, with NASDAQ leading the charge, with good old Apple selling off aggressively yet again, nearly 3%, closing today at 391.96. So closing south of the 400 handle for the first time in quite a while. An important psychological milestone for that name, if nothing else. And as Alex was so cagily alluding to, it is indeed Earnings-palooza day. We don't have Apple, but there's a lot of other tech names reporting today. We have, of course, Google, we have IBM, we have Microsoft, we have just a whole bunch of big tech names reporting earnings today after the bell. And since Alex already saw some of them and let the cat out of the bag, maybe we'll start there. What have you seen, if anything, Alex, going on right now in Google? Google, of course, closing today down 17 handles to 765.35, so well off that much ballyhooed 800 level that everyone was talking about just a couple of weeks ago, seeing some aggressive sell-offs. And you said the earnings are already out here?
Earnings already out. They beat by almost $1.
Wow.
And in after hours, they're trading the high 7.8s, 7.90s. So they're up $20, $25. They're ticking in $2 and $3 increments. So again, a caution about after hours trading. It's obviously a bit thin. IBM looked like it lost about $3. It missed by a little, but they were selling it off about $3. Google's now up 19, but again, ticking in $2 and $3 increments. So Google surprised, IBM disappoints.
That good old GOOG 765 straddle with 2 days to go was trading about $35. So that's a hefty premium. Of course, given what we're seeing in the after hours right now, looks like it seems to have settled out around 787 or so. We'll see how the vacillations continue. That would be up about 22 handles right now or so in the after hours. So significant upside moves. Of course, this is just the first gasp. They always have a little bit farther to go before they settle into where they're actually going to report. I also neglected, we talked about tech names, but also the stealth Apple is reporting today as well. Chipotle, they of the tinfoil burrito fame. And looks like their numbers are out as well. They closed today at 328.36, trading 352 in the after hours. So Chipotle getting quite the boost here. Let's pull up how their 2-day straddle was looking as well. Yeah, they were trading at about, looks like about $22, $23 for their at-the-money straddle there, the 325. So, yeah, looks like they may have outperformed over there. You guys do much over there at the pit? I know you guys like the tech name stuff. You guys do much with Chipotle over there? Tinfoil burritos, float your boat?
Well, I'm more of a Qdoba guy myself. And actually, the Finkel's guy from across the SIBO opened up a taco fresco next to my office. So I go see my favorite Jewish delicatessen and order a burrito from him. But less a CMG, more a GOG group. We were looking at the Google 780 time spread today. The April expiring tomorrow, April expiring next week. Could have been bought for about $1.15 at the close. We like that one a lot, and I think that one is going to look spectacular in the morning. To quote my favorite Superman, Lois Lane, it's real and it's spectacular.
Yeah, I'm looking at that one here. If this trend keeps up here in the after hours, that time spread will be a juicy concern there. I don't have Qdoba on my screens, but I'm guessing they don't trade at the healthy premiums that Chipotle does.
That's a private firm, I think.
Are they really?
Okay. Was a spin out of like McDonald's.
That's Chipotle.
That was Chipotle. Yeah. Chipotle spun off of McDonald's.
The only thing I know about Chipotle is it really bothers me when people say Chipotle.
Then they're probably from the deep south or something.
Well, no, my wife's grandmother always says that. Oh, you ate a Chipotle?
Although we just alienated another quarter of the country. We have to alienate one swath of the country.
Well, today I will only alienate people that say Chipotle.
People say Chipotle, people from the Deep South, and of course people who of a certain age have all been alienated in the past 2 minutes or so. So we're off to a rollicking start here on the show. Alex, you mentioned IBM as well. They, of course, reporting here after the close as well. They closed at 207.15 today. They were down a couple of handles on the day, but they're down, looks like about 10 points in the after hours as well. Another one seems to be that straddle is outperforming. They closed at about 8.5 on the front month at them. I love these 1 day, 2 day to go straddles. They're before earnings. It's just a pure.
Special, thanks.
What was that?
They're very special.
Yes, special.
And this stuff is ticking in $3 and $4 increments. I have a screen. I have Bloomberg on a screen here, and it isn't discrete ticking. I mean, this stuff is just bouncing around.
Yeah,
So,
it's trading 783 right now.
And now, Alex, another name you have a little bit of skin in the game for is good old Microsoft, and I've often joked that they are, over the past decade, one of the best ongoing premium sales. That hasn't been so much the case over the past few quarters, and it looks like if the numbers are out here in Microsoft, that may be holding the course right now. They closed today about 28.80. They're trading in the after hours right now about 29.10. Front month straddle went out a whopping 80 cents, so not too much going on there, and they're pretty much falling right in line. Another resounding meh for Microsoft on the earnings front.
We make a lot of money, but we don't make a whole lot more than we did last year.
Yeah, you think with some of the stuff kind of filtering into their pipeline now, the Surfaces, the Windows Phone, they'd have the potential to perhaps surprise to the upside or the downside a little more, but apparently not.
Part of that to just maybe some, because PC sales. They're moving, like, some categories are slowly generating revenue, but they're also losing, like, PC sales go down, so it goes in one door, it kind of comes out the other.
Plus, the products like the Surface Pro and Windows Phone are so nascent next to Office. I'm sure they're probably just spitting in the wind of the sales and revenue coming out of those products. And, of course, the big play from Microsoft they haven't announced yet, the new Xbox. That's probably one of the only other divisions at that company, aside from Office and Windows, that actually makes money these days. So it'll be interesting to see what they announce with that, and a lot of rumors banding about what that's going to be. And, of course, that won't be reflected here. So it looks like yet another resounding meh. Did you guys have any Microsoft strategies lighting up the option pit live this morning?
No.
We had a nice trade on buying the straddle last week, but we were already able to take it off because Microsoft went off to the races last week. So
Yep.
this we like the pre-earning straddle where you buy it just in case the market moves. Like it was one we looked at in Google last week. But I mean, the market is kind of pricing like that. We've had some pretty spectacular moves, I think, over the last 8 trading days. Pretty big ranges. So even buying earnings gamma can work. Hard to believe.
Yes, I believe that was part of one of your courses you were discussing last week, is the whole buy in the straddle and let it kind of pay for itself for a few days until you can get perhaps some pop in it. The concept of buying premium during earnings blew the minds some of your students, I believe.
Yep. So I there are certain times to do certain trades and there are other times not to, and when the market is starting to kick around like this, those strategies become a lot more appealing, So you can't lose any decay really, and if you wake up in the morning and everything goes to heck, you make a fortune. So those are okay.
Andrew, I keep telling you this. Maybe one day you'll take me up on it. With the preponderance of premium selling books out there, yours, the free juice book, would be alone on the shelves in the premium buying space.
Juice.
You really need to get this thing going.
And we don't mean apple juice.
Yeah, like what we could do is we could have a picture of Andrew offering like a cup of something to
selling lemonade.
Selling lemonade to like a little kid, and it would say free juice. And I'm sure.
Wait a minute, little kid. Where did that come from?
And the little kid could say retail trader. He'd wear his shirt. and it would be hilarious on so many. It'd be creepily hilarious.
Yes, it'd be very disturbing on several levels, I think. But it'd be good as well. I could see that image. And I could see the DCFS guys knocking on your door the day after the book comes out.
Exactly. I'll use one of my kids. So I won't get in trouble. That's some strange kid.
I like it. Andrew Giovinazzi, how to buy free juice and do stuff. And help the children at the same time.
Throw a little T-shirt on Lydia.
Yep.
You'd love that. Yeah, no, that's a good idea.
Yep.
There you go. That's your free marketing tip for the week. Anything else catch your eye in today's action? We saw a little bit of a pop in the old VIX cash. Nothing too surprising given today's activity.
No, I thought it was I thought the move was just kind of fair. I mean, when the market goes down, the VIX should go up. That's the way it works. That's the way the product works.
Is that how it works? I need to go back to that primer again.
I know that people, but the thing is then we have, just trying to clients, it's like this should be happening. It's not a reason just to go sell it because it's going up. It's supposed to happen like this. So you have to kind of be, you have to be mindful of the fact that that's what we got. Wow, Google unchanged now.
Wow.
That's for right now.
The bloom has come off the rose here in the after hours for good old GOOG. Wow, that was quite the gap to the upside, and then erasing.
Tomorrow can probably gap again. Who knows?
If only retail options traders could have sold out their calls at that point. Oh, I'm going down a rabbit hole again, so I'll avoid that.
I know. Well, you can still trade one lots in the stock and adjust.
That's true. There you go. You can do that.
Ultimately you can do that. So, but for vol, I think the vol, if anything, the VIX feels almost slightly underpriced from all the movement we've had. Today's been the first kind of under what Mark would say, Mark Longo and I would say is a meh day as far as movement goes.
Yeah.
But the market was lower, and I just didn't see a lot of, I would say, panic put buying. It felt more like guys that own puts were selling puts today, dumping their long puts out.
But you can clearly see the market has changed, at least for the near term, in that, this was 2 weeks ago, down 10.5 points would have been the biggest move in a month, sans Italy. And now here we are, and today's the first day where we haven't moved about 1.5%. Interestingly, the VIX is still below where it closed at the peak of our Beppe Grillo election panic. So I do think there's potential for the VIX to keep going, but we're going to have to see realized vol stay above 1% if the VIX is going to move any higher.
This just goes to show how quickly the frame of reference for the marketplace can change, because you're right. Just a week or two ago, this would have been panic in the streets. And now it's kind of like, oh, yeah, we're back in that mode again. We're back in the 1 to 1.5% move. We're actually underperforming today, so everyone's kind of taking a deep breath, a sigh of relief, and blasting out their long downside puts, because who needs them now? We only moved 0.7%. Speaking of which, I'm not sure if Mark told you, Andrew, but we had a great guest last week on the Volatility Views program, made some interesting points about the holding of these downside puts in the S&P, and how if you had to guess anywhere in the marketplace where you could get some decent bang for your buck and some decent carrying in some options as opposed to the decay rate, would you guess near-term downside SPX and SPY puts to be the place to go? I think you probably guess anywhere else but there. And yet he made some interesting points about that. I'm not sure if Mark had a chance to illuminate you on that. If you haven't had a chance to listen to that, listeners, or Andrew, I'd encourage you to surf on over to the Volatility Views page on the Options Insider, or search for Volatility Views in iTunes or Stitcher or wherever you listen to your finer podcasts, and check that episode out. Kind of interesting stuff. We had some audio hiccups there, so if you can get through that. It was a scintillating interview. Before we wrap up the old trading block, anything else catch your eyes, Andrew or Mark or Mr. Alex?
I would just say that Apple's now a $390 stock, and pretty soon the NASDAQ is going to start acting like an actual index again if things persist. And it's interesting. The other thing I'd point out is that the SIBO has since they listed mini options a couple of weeks ago, which is Amazon, Google, Apple, GLD, and SPY. How are 3 of the 5 of those doing since they got listed? SPY's about normal, but GLD and Apple have just been crushed since those products got listed. Not a fun time to be the retail trader.
No, particularly, if you were buying some downside premium, it kind of worked out, or buying premium in general with some of these names. Yes. But of course, when you're buying anything in these minis particularly, the spreads are just so atrocious that you really need days like today times 2 to really make back anything in those names. They're just between full price commissions. We talked about this last week. Full price commissions and these spreads that are several times seems like wider than the regular options. It's just it's a recipe for getting nickel and dime to death trading these things. Unfortunately, because everyone was hoping, I know, the minis were going to be the salvation of the options business this year. if it keeps on this course, at least unless there's some course correction and some pricing corrections and some other things, doesn't seem like that's going to be the case anytime soon. All right, and too bad Tusaw couldn't make it today. I forgot to mention at the top of the show, good old Uncle Mike Tusaw can't join us. He was flooded out there in the hinterland, so we wish him well pumping out his basement. I'm sure that's quite a bit of fun. I'm sure he'd much rather be here than doing that. But it's too bad, you're right, because he would be the one to talk about Apple and reaching this new psychological level. You know, Apple's in what was that?
Mark, I think we should have our own Apple index, and that should be how far above Apple is above intrinsic value.
Well, right. Or
are you getting back to that cash level again? They have $150 in cash.
I've got a great idea. What we should do, though, is have what's called the CNBC index. And what we'll do is we'll run the top 10 names that are being talked about on CNBC over a week, and we'll short them.
I thought you were saying we should pull out the options trades being picked on CNBC that week and and mock them to death. Listen, we could do that too. That would be a whole other show.
They're not
it might be a fun show, actually.
It's Stella put in Disney. That's not an option trade. But what we should do is just look at them. All right, they mentioned gold 4,000 times, Apple 7,000 times, and Facebook 12,000 times. All right, that's our indexes that's our 3 stocks that we short, and then we go long the S&P 500 against it.
Well, I guess if you follow that Apple math until about last, October or so, you weren't looking too good. Now you're printing money. Now you're doing all right. You had to just weather that storm.
You have to be patient with your index.
Yeah, you had to weather that 2-year storm or so, and then you were doing all right.
Gold would have been a problem too. No, well, you wait for them to get to like kind of insanity, and then you knew gold and Apple were toast when they were rallying and vols were rallying. I straight up said this is exactly what happened in 1999, and guess what? Exactly what happened after 1999 happened to Apple and gold. So, traders, those who do not learn from history are doomed to repeat it.
You know, we're in those histrionic levels when it comes to Apple now that we're south of 400. I'm starting to see the first of what I'm sure are many to come Apple articles. We saw the Microsoft Steve Ballmer has to step down articles a while back. Now it's Tim Cook needs to go. So I'm sure that heat will pick up as Apple continues to drift south here. But you know the vitriol is picking up now when you start to see those, because for a long time that was just a sacrosanct thing to even think about. And all of a sudden now he's on the fire as well. So interesting stuff.
Product.
Yeah, they need something. It's the watch. The watch is going to save them. Haven't you been reading?
That's
watch.
Terrible.
All right, and with that note and the thought of what a possible Apple iWatch could even be, we're going to close out the old trading block and roll right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and that funky tune means that it is time once again for the Odd Block. This is, of course, the portion of the show where all of us, except for the Viceroy, he has his own fancy hat, all of us put on our fedoras and we prepare to dive into the seamier, the seedier, the nastier, the shadier side of the options business. This is, of course, the Odd Block, and we're going to kick things off today with Bally Technologies Inc., ticker symbol BYI. This one has popped up on our radar a few times in the past, but it's been a while since we've talked about them on the show. This one closed today $47.33, down about $0.50 or nearly 1% on the day today. This is a name that typically lights up the tape, doing a whopping 200 and change contracts a day. But we saw a nice little pop in volume today to over 4,000 contracts. And the bulk of that coming in one sizable put trade. We got these May 45 puts lighting up the old tape, lifting offers almost 3,000 times, over 3,000 times by the end of the day, actually. But a lot of action here in those May 45 puts. Andrew, did that catch your eye today as well?
It did. That was an early morning. It was funny. Most of the odd block this morning was basically put buyers, which is very different from the last few weeks. By and large, the size has been buying calls. So yeah, this is one of the stocks in the middle of the range. I believe we've got some earnings coming out and basically just, speculative paper driving the ball up. This is good old-fashioned. I think the stock is going to tank, and I'm buying some puts, potentially protective, but just, again, just looking like somebody's buying a big block of puts thinking the stock's going to go down. Now, the thing is, it's down another 30 cents since I posted, so the guy might be right already. Guy or girl.
Yeah, he's already in the money. I found the price here. They went up for 95 cents, so already about 20 cents in the money on these puts.
Of course, printing money. The price. That's part of the value of the odd of is I do.
I just have to find it sometimes. That's all. That was a user error on my part. All right. Next up, in ye old odd block, we have everyone's favorite ITUB, which is, of course, short for Banco Itau Holdings SA. Everyone's favorite. I know I check this every morning when I wake up. This is the name that closed at $16.14, down about 4% on the old day. And this is another one that actually does a little bit of paper, at least compared to Bally's. They do about 4,000 contracts a day. They did over 13,000, and the bulk of that coming again in one big trade. And as Andrew was saying, there is a bit of a theme to today's odd block, kind of the polar opposite of the themes we've been seeing over the past few weeks, where everyone was coming in, loading up on upside calls. Now it's loading up to the downside. Here we have the June 17-19 put spread going up for a buck 45, 5,000 times, with an average volume here of about 4,400 contracts and some open interest here on some of these strikes. So it looks like a chunk of this could have been rolling down. Is that what you think as well there, Senior Andrew?
Yeah, I think just from whoever traded it, I think traded pretty well. They bought the 19 puts for a nice price. The banks have been sliding, and I guess they're just taking Itau with it. And the guy or girl rolling their 19 puts down to the 17 level puts, because they sold the 19 puts out for parity at the time. Because
always a great trade.
I'm assuming that it was a long sale, and they told their broker, I'm not selling those for less than parity. And the broker,
if you're doing that the short way and you're selling them for parity, then you're kind of doing something wrong.
It's funny, as somebody hedging this, of course, they're buying those 19 puts and buying stock and getting calls for nothing. So if the market does turn around, they're going to have a potential home run ski on their hands. And then buying the 17 puts. So, this is one of those trades too, again, feeling like a long stock holder. I think hedging, and, if you want to use a hedge, you got to roll your hedge if they make money. I mean, that's what you do, because you're not really going to get rid of the stock. You just want to make some money on the puts. So you got to take it when they give it to you. So made sense to me, but not much of a jiggle and volatility with this for the spread. So, but that's what it looked like. Looked like a rolling position for sure.
So this is chapter 3 of the Buying Juice and Doing Stuff book, then.
This is correct. You have to do something with your juice after you buy it.
Well, aren't you supposed to roll down the street and sip on it with some gin?
Maybe this was the little boy who was the retail trader. He's rolling down his size puts because he read your book.
That would be great.
That would be something. He read your fictional soon-to-be-released bestseller book. All right, and moving on, keeping this theme alive. Sometimes I think you do this on purpose, Andrew. I think you just pull all the puts to keep this narrative intact. But I like it. It's a good trade. It's a good trend here for the odd block. We're going to keep on rolling on the put side of the equation here with some size out of the money puts, at least size comparatively for this name, trading in good old AUXL, ticker symbol AUXL. This is Auxilium Pharmaceuticals Inc., another name that usually lights up the tape, doing about 800 contracts a day. They did about 1,200 today, so good old 50% pop here in AUXL. This is the name that closed at about $16 even on the day, down about 2%. And what we saw was some more open and put paper, surprise, surprise, coming up here. This time rolling out to May. In the May 15 puts, saw about 1,000 of these guys going up on total on the day, 1,020 actually, for prices around 50 cents. And open interest is 0, so by definition, this is all opening. So interesting stuff. Not the largest trade in the world, but for a name like this that doesn't really do much, it's actually significant. Good old AUXL, not exactly a name we talk about quite often, but it does fit with our odd block motif of little pharmaceutical names, because this one trading $16, so it's not one of our $2 or $3 specials. And this one is focused on developing and marketing products to biopharmaceutical products to specialist audiences, whatever that means. I love some of the descriptions of some of these names here in the old odd block, but 1,000 contracts of opening put buying here on the May 15th. They have earnings on the 9th, so those are indeed incorporated in these options. So we'll see if this is just someone looking to hedge some downside exposure ahead of the earnings announcement on the 9th. And last up in ye old odd block for today is a name we talked about quite a few times. Again, it's a shame good old Uncle Mike is not here because he likes to talk about this one quite a bit. This is a very broadly held name. Good old XLF, of course, the Financial Select Spider, closed today at $17.83, down about 1% on the day. And this is another name that typically lights up the chart. XLF does a lot of volume, 200,000 contracts a day, doing a whopping 332,000 puts. I'm getting the motif stuck in my head today. 332,000 contracts, but a lot of them were puts, including these April 18 puts we saw going up for about a dime today. They certainly popped up on your radar, did they not, Andrew?
They did, and you know why? They were like in blocks of like 1,000, 1,500, 3,000, 25, just like constant for 9 cents and 11 cents. Bang, 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 bang. It just felt like, you just feel like, you know, this customer's never going to get filled because they have more to buy than you want. And probably, I think they probably ended up buying around 40,000 contracts at the time. And I remember checking at some point today, there was a 20-cent bid on those puts. So the guy made a quick dime around 40,000 times.
Yeah, he did all right. Not bad for a few hours work.
No, not a bad one at all.
I'm telling you, that little kid, he read your book and he's putting it to use.
Well, see, if you sell your juice the same day you buy it, you don't have to pay decay. I
love that. I like that. Same day, and avoid the decay. There you go. That could be the mantra for your book.
Trade the same day, avoid the decay.
I like it.
There you go.
Now, I thought this guy was extra savvy, though. I'll just give this on my savvy site. Is he bought puts with the most gamma he could find. So if the continuing sell-off happened, even, only like about, literally XLF only had about a 20-cent move, but the guy made 100% return on his options. So only a 20-cent move in the underlying, and a lot of it translated right to the options for a ginormous return for him. So I'm going to say that's about as well constructed as you can get.
It's pretty good. Gotta love that leverage.
You gotta love it. So I'm going to say they are a graduate of the Buy Juice for Free Club.
They are certainly better than the buy the 15, 20% out of the money calls and sit club, which we talk about so often. And watch you erode to zero.
Yes.
All right.
Thank you. Have big expectations for those calls.
Yes, big time. Swing for the fences. All right, thank you for that, Mr. Andrew. You can now put away your fedora. I might keep mine on for the rest of the show. I think it looks kind of fancy. And now, speaking of fancy hats, it is time for the Viceroy, and it's time for him to take the reins in the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome back to the Express Block. As I mentioned, this is the portion of the show where the Viceroy takes the reins and I get to take a rest. And Senior Viceroy, I know you have been washed out, literally and figuratively, out there in the hinterlands. So you haven't had a chance to keep your eye on too much, but I know you have somewhat depressing news / alerts for our listeners who may not be familiar with all the stuff going on in Washington, how there's some pending legislation that may indeed take some of the steam out of their sails, particularly if they're avid covered call writers.
Yeah, I want to take the time. I had lunch with Uncle Mike yesterday, and so I'm going to get on his soapbox and rant a little bit today. But the the White House sent to the Hill a new proposed tax law, and there are a handful of things that we in the trading community, and especially us in the options community, should be aware of. And the three key issues in the proposal are, number one, capping IRAs, which means no more deductible contributions when you hit the cap. Now, I know some people are going to say, well, that's a fat cap because originally it was $3 million and now it's been extended to $3.4 million. But capping IRAs is just a bad idea, and I don't want to be a conspiracy theorist, but a lot of people over the years have had concerns about government treatment of IRAs, and I'm going to open the Pandora's box when I say this, the treatment of the Roth. And so I think we need to keep a real close eye on this and get on the phone and get with our congressmen and our senators as this thing winds its way through the legislative process. But two other things, key areas in the proposal. Number one is the elimination of 1256, and that impacts, for those who aren't familiar with 1256, those are basically cash-settled index contracts, ETNs on physical commodities, and much of the futures complex. And 1256 is the 60-40 treatment, 60% long-term capital gain, 40% ordinary income. The proposal eliminates 1256. And another real ugly thing the proposal does is it creates mark-to-market accounting for every contract. So you'd essentially have to realize gains or losses even on contracts you don't trade out of. And none of those bode well for the derivatives community. And one other thing to be aware of, it's not in the tax bill, but the transaction tax is back on the floor being discussed again. And the transactions tax would tax every trade, stock, options, futures. The rates are a little different. That transactions tax has kicked around since the market break in 2008. It's a live topic again in Europe. France has already passed it. Obviously, the whole issue with the transactions tax is if everyone doesn't do it, the trading would just move to the countries where there is no transactions tax. It's not that easy in the United States because we tend to trade a lot in the domestic market. I'm not saying we don't trade European instruments. We don't trade Asian instruments. I'm not saying that at all, but we tend to trade a lot domestically. So we all need to keep a careful eye on this. And it's cards and letters time as this winds through the legislative process to our representatives. We don't want to be in the eye of this, and the industry, the community as a whole, has kind of been in the eye of Washington since the market break in 8 and 9, so we all need to be aware of it.
Thank you for that very, very depressing note for the show here, Alex. Bringing us all down. We were so happy. But, you bring up some good points. And the reason I mentioned covered calls is because, you mentioned the transaction taxes and the way these things are being considered. And one of the things they're banding about down there in Washington now, which I think sounds ludicrous to a lot of the listeners of this show because they are, of course, in the choir, they understand how this stuff works, is that they're talking about if you write a covered call on an underlying position, bam, that's taxed as if you sold the underlying right off the bat regardless of what happens to that option, it could go out worthless all day long. Doesn't matter. That is suddenly an instantly taxable event. And it's, it sounds ludicrous to us here on a show like this to think about that kind of thing, but that's kind of what's being bandied about. So if you listen to a show like this, or you like to actively trade options, and I'm assuming you do, if you like listening to the Options Insider Radio Network and the Option Block, then it might be worth paying attention to what's going on down there, because there are some crazy, crazy proposals being bandied about. Thankfully, a lot of the people here in the business are out there lobbying on your behalf, guys at OX and others down there on the Hill saying, hey, this is kind of ludicrous. I mean, certain things mark to market is a good thing for some of these ridiculously opaque OTC transactions that really have no meaningful valuation system. Having to hold their feet to the fire in some way, shape, or form is a good thing. But taking that and trying to apply that to the very transparent listed derivatives market, where you don't really need that same type of rule, that same type of concern about things imploding in your face, it just seems like it's throwing the baby out with the bathwater. So hopefully, go ahead, Alex.
Yeah, I was going to say, especially in the Chicago community, because 1256, I mean, this city is the center of derivatives trading. It is the center of options and futures trading. Ed Tilley, the incoming chairman at the CBOE, circulated a letter this morning about the concerns they have, and obviously CBOE and the CME will raise a strong voice in this. But nonetheless, Washington does silly things, and irrelevant of if you're, a red state or a blue state, taxation of derivatives right now is complicated enough. Without what they're talking about now, really, they're looking to punish us. And I think post the breaks in the market, 2008, 2009 market events, people are looking at Wall Street and they're going to try to extract the pound of flesh from Wall Street. And these kind of taxation proposals are not unpopular with the Washington community and the broad community as a whole, because a lot of times these are looked at as fat cat taxes. And we forget we have a lot of individual investors, we have a lot of small traders. And even if you're a big trader, doesn't mean you should be penalized. And things like the constructive sale rule that you're talking about that no one has ever understood. I mean, I know folks at OCC that have written white papers on this, and you kind of read the white paper and they go, yeah, it's a little bit ambiguous, but so is the IRS ruling on this. But things like transaction taxes and constructive sale rules are taxing us for stuff we do on a day-to-day basis. I mean, stuff we do by just showing up. And a transaction tax would be devastating. And, day trading, it's gone if there's a transaction tax. So we need to stay on top of this and pay real close attention to what they do.
There aren't many issues upon which all the different competing exchanges and brokerage firms and everyone else tends to agree. We talk with a lot of them about a lot of different things on a regular basis, and this is certainly one in which there is a uniformity of opinion in terms of the transaction tax. I mean, people think, this is the fat cat tax. Let's go get those big derivatives fat cats out there and make them pay more of their fair share. But at the end of the day, that just filters down to you who owns a mutual fund or anything else who trades on a regular basis. It filters down to you in so many ways. So it's not taxing them, it's just taxing you. So be aware of that. And Alex, we'll have to turn to you from now on. Maybe we'll change the name of this segment to the Downer Block or something along those lines. But we'll look to you for our nice dose of reality, our cold splash of water in the face. But thank you for that, sir. Perhaps it's appropriate given the amount of water you're surrounded by right now out there.
Yeah. Well, thanks for giving me the soapbox today, Mark.
No problem. All right, sir. Thank you for that. You may now take off your Viceroy hat, and we shall keep on rolling into our final segment, Around the Block.
Around the Block.
All right, and those horns means that it is time for our final segment Around the Block, where we look back at what we talked about earlier in the show, especially a day like today with some earnings, and also to forward to what we're watching for the rest of the week into the weekend. A quick rundown here of some of the earnings we hit on at the top of the show. Google, of course, being the most active of the bunch right now. They were up, they were unched, trading a little bit up now, up about $5 or $6 to $7.71 in the after hours right now. So Google getting a big head of steam and then coming off aggressively. You can kind of say the same thing for Chipotle. It hasn't come off as aggressively, but it was trading up about $30, now trading up about $20 in the after hour, actually even less, 17, up to $3.45, closed at $3.28 in the old after hours. IBM trading, getting a little bit of it, taking a little bit of its losses back, trading around 200, closed at 207, was trading down about 10 handles earlier in the show. And last but certainly not least, we have the resounding meh company, a.k.a. Microsoft, catching a bit of a bid here, trading about, looks like about 50, 60 cents higher in the after hours, and that usually doesn't sound like much. You got Google and Chipotle trading, moving 30 handles at a clip, but remember, this is the name whose at the money straddle went out at 80 cents with a couple of days to go, so no one's expecting much, and this about delivered, once again, the resounding meh of Microsoft coming to bear in their earnings here. Anything else catching your eye in today's activity before we look ahead to the week ahead, Mark, Andrew, and or Alex?
Yields, macro yields. I know I sound like a broken record, but 10 years under 170, the German 10 years under 1.25, those do not bode well. Those seem to indicate slowing economies. It wasn't a month back that we had a 2% on the 10-year. And this doesn't look good. I'd like to see a bid get in there and get that back up into the 175, 180. I'd love to see 2 again. But I think what the market's going through is macro. I mean, I know I sound overly academic and dorky every time I talk about this, but looks like the world's economies are slowing, and it ain't going to be good for stocks.
This trend continues. I'll have to put a macro block in the show. What do you think, Alex?
Well, I like the Viceroy hat. I don't want to have to change clothes again.
You don't want to give up your hat. It is quite the jaunty cap.
Yeah, I don't like these wardrobe changes. So, no, I want to stay with the hat.
All right, Mark and Andrew, what are you guys looking forward to in the week, or the rest of this week into the weekend and early next week?
You mean the meh week? This has been like the stinkiest week of 2013, I think.
Mm-hmm.
Just, it kind of started off bad with the Boston thing and just never really got better. So this is this is a week where am I really looking at much to do? Not really. I'm just closing off some short calls on some positions, and it's kind of like a bookkeeping week. It's not like a real week of fantastic things to trade, I have to say. And I don't disagree with Alex. It's weird. Mike Tusaw banging the drum against risk management takes some money off the table. And there's something to be said of that. Now, of course, if you sell a call, you're going to have to pay taxes on stock. I don't know how you're going to raise the money.
Yeah, that's a good one. You sell a call 3 handles above where it's trading, and then after the stock gets wiped out.
Taxes on the stock. What's 3 handles above? I mean, where do you get the money?
I don't know if they thought it through that far.
I clearly, after hearing the congressional testimony, I'm quite sure nobody in Congress has any idea how anything works at all when it comes to the derivatives market. Not even a cursory knowledge. Zero. Even writing calls.
Tell you what, after the show is done, I'll just put together my campaign for Congress right now, so we can get somebody in there at least who knows something about something here, at least something that we talk about.
It's sad because I think it would help from the regulatory view just having somebody understand how it works. And it would make their job better, and they always attack things from the exact wrong opposite way. So
I'll contribute $1,000 to your campaign immediately.
Well, there we go, Alex. I'm up $1,000 to the upside already. I haven't even done anything yet.
Somebody's going to True for dinner.
But who will? But who will host all of these radio shows?
That's true. That's true.
All these problems I'll have to deal with. But
yeah,
anyway,
I've taught in front of Congress when I was at the SIBO, and I've taught at the IRS. And the one thing I will give you is the IRS people are knowledgeable. I'm not saying I agree, but the thing about teaching in front of Congress is you get the list of the 40 congressmen that are going to come, and it's 12 senators and 28 from the House, and none of them show up.
It's all their aides. It's all their aides, right?
Yeah, they all send aides. The last time I taught there was when the constructive sale rule was coming up, and that's when there was still a ton of that 3-year OTC collaring and hedging, and the aides were smart. And I got this one question from an aide. I'll be quick. She basically said, how hard is it to price long-dated options? And I said, it's very hard. It's simply not easy. And she said, okay, so I knew that. I wanted to hear your answer. She said, I'm going to write a report back, and I forget whose congressional aide she was. And then she paused and said, but he doesn't care. So I'm with Andrew on this. It's amazing how out of touch they are and how close to home some of these issues are and how they'll impact us.
You know, that's the kind of the hidden secret of our government. It's all run by aides and staffers. The actual congressman to show up to push the button to vote and collect the checks, of course, when it's fundraising time. But before I get too far down the cynical road, we'll look ahead here in the Around the Block segment. We have, of course, a lot more earnings coming up next week. It wasn't just today. We have, of course, Netflix, formerly the Widowmaker, now perhaps the Widow Repriever these days, rallying a bit off of its lows, closing today 163, down about 5.5 handles or 3%. They are reporting next week on the 22nd. We also have Amazon, another perennial tech stalwart. People keep wondering when they're going to start making money on all these initiatives they have. Kindle Fire, Amazon Prime, all these interesting things they have in the hopper. A lot of cool stuff going on at Amazon, but it doesn't seem to be able to trickle down to the bottom line. So we'll see if that's the story yet again for Amazon, closing today at about 260, down nearly 8 handles on the day today. They're up reporting on the 25th, and of course that little fruit company last, but certainly not least, on the 23rd. I know Uncle Mike will be very excited and very busy on that day. The BBI is always quite low when Apple earnings come to town. But unfortunately, that's all we have time for today on the Around the Block segment, and also for this episode of the Option Block. But before we go, I'd like to take a quick peek into the hearts and souls of my cohorts, if you will, and see what they have cooking in their respective necks of the woods that may interest you, the listener. Starting with you, Alex, what is coming up in the land of OX?
So you're hearing clocks chiming in the background. I'm a clock collector, so I'm going to talk over them. Tuesday, 4/23, Russell Rhodes from the SIBO doing a webinar at OX on index weeklies. Russell's a CFA and a very, very bright guy, part of the education team over at SIBO. Wednesday, the 23rd at 2 p.m. Chicago, we're going to talk minis again, and yesterday we were meeting on the maxis. So, but again, the exchanges have got to do a better job of providing liquidity, or these things will be dead on arrival. Tomorrow at 3:30, Wednesday, the 24th at 3:30, a fabulous webinar by a scintillating and talented guy wearing a Viceroy hat. We're going to talk about the Idea Hub again. Did one yesterday. It was well attended and lots of good questions, and people should come visit because it's an innovative tool.
Thank you for that, Alex. You can check out all that stuff over at the optionsexpress.com site. Click on the Education tab, and you can see a link to all of their upcoming webinars and educational events that you can attend even if you're not a customer. How nice of them to make Alex's services available to one and all, even those who aren't customers. And speaking of customers, what is coming up for the customers and friends of OptionPit.com?
Come see me at the Option Insider Unusual Activity Forum on May 15th. That is all.
That is all, but that is indeed an important one. Of course, he is referring to our Unusual Activity Forum Chicago being held at the Chicago Board Options Exchange on May 15th at 2 p.m. Be there or be square. You can surf on over to theoptionsinsider.com/events. We've really gone overboard stacking the deck for you guys at this event. We got a lot of great speakers talking about a lot of great content, a lot of great tricks and tips and analyses, or a lot of great tips and tricks and strategies for finding unusual activity, how to separate the wheat from the chaff, a lot of the stuff we do here on the Odd Block segment, and then what to do with that unusual activity information once you found it, how to trade from it, and how to avoid some of the stumbling blocks and hurdles and errors that a lot of newcomers encounter when first trying to trade from unusual activity. You got myself, you got Mark, you got a bunch of great guys coming in to talk about unusual activity. We got a floor tour, we got a bunch of registration bag full of ridiculous goodies. $99, theoptionsinsider.com/events. If you're in Chicago on May 15th, we really want to see you there. It should be a fantastic event. And on behalf of all of my cohorts, my partners in crime here on the Option Block All-Star Panel, we want to thank all of you out there in the listening audience for downloading and streaming and subscribing to this program and making it such a success. And we'll see you next week right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated, all rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.